please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, let's get talking about the technicals of the market. We have the Nifty, which is down 65 points, and the mid-cap index, which is down 40 points. Ashwani Gujral is with us. Ashwani, hi, afternoon. Over to you then. What are you recommending in terms of mid-caps as well as your index strategy?
Well, for last many sessions, the market was contracting, and you spent 5 or 6 sessions within a 100 contracting, and you spent 5 or 6 sessions within a 100-point style range. So it appears to be clear that on the upside we are hitting the upper end of the range. 10,000, 11,000 is the band for this year. I mean, each time you go to one end, you should be looking at things going to the other end. So my sense is this market is trying to expand on the downside. Now sometimes you'll get a nice gap down and it keeps going. Sometimes it's a bit slower. I think it's a bit slower because of HDFC Bank. Once that kind of lets go, you'll have a harder fall. So that way people should still get short on Nifty as well as Bank Nifty. As you can see, even IT is participating on the downside. Having said that, Pharma is moving towards the other side. DV's Lab is a buy with a stop of 1060, target of 1120. Tech Mahindra is a sell with a stop of 710, target of 682. And Canara Bank is a sell with a stop of 279, target of 265.
Okay, we've got questions for you, Ashwani, from viewers. Tushar is writing in, he's got shares of D-Mart Avenue Supermarts at 1487 a share, wants to know whether to hold or sell. What would you tell him?
Well, he's bought it after a rally, but clearly it's not that sort of share where you keep for 15 days and then you sell. If he keeps it for long enough, I think even from here, it will end up being a multi-bagger. So it's that sort of stock because, because he's on a profit, he sells off and gets into something, which starts to go down. That's a mistake he should avoid. In this sort of an year, it's stocks like D-Mart, etc., which will protect your wealth. Most of the others are likely to lose it.
Ashwani, before we let you go, I had a quick question about the 3 frontline pharma stocks. I'm just picking Sun Pharma, Lupin, Dr. Reddy's, or okay, even Cipla. All of them have given returns between 5 to 9%, and Dr. Reddy's is up the most on a week-to-date basis. Which one is probably looking technically the strongest to you from current levels, and for what time frame?
See, right now it's a blanket buy because everybody was short, underinvested in pharma. Once they start getting to equal weight, then you can differentiate. Right now, the best you can do is don't try to get into Granule, etc., and very, very small companies. But, Aurobindo Pharma, Sun Pharma, Lupin, all the large caps, I think they should move up first. And even the smaller companies should have a decent catch-up, very similar to what happened in IT. After this first phase, then probably you could get a bit more choosy. But right now, they should all move up.
Ashwani, thank you very much. Appreciate you joining in. And we speak in about an hour again at 12:30. Thanks again. 64, 65 off. So it's not essentially incrementally selling off more. We lost about 15 points, not 15, 10 points from the time that we started at 11. It's kind of sort of holding those extra losses at about 63, 65. We take a very quick break here. More coming up when we return.
Well, the mid-cap index has recovered a tad bit from the day's lows, so still down, but a little better, I think, from the previous lows. So you can see that little bit of buying which has come through for the Nifty mid-cap index. But moving on then, private equity investors seem to be making a beeline to pick up a piece of Baba Ramdev's Patanjali Ayurved. Speaking exclusively to CNBC TV 18's Priya Shed, the Patanjali Ayurved Managing Director, Acharya Balkrishna, categorically stated that the company has no intention to sell stake to investors and will use internal cash flow plus term loans for expansion and acquisition. Listen in to that conversation.
बैंक से ही हम लोगों ने बात की है, कई बैंक वाले हमको दे भी रहे हैं, हालांकि अभी हम लोग ये भी सोच रहे हैं कि कोई हमको कोई प्राइवेट फंड में भी कोई अच्छा कोई हमको हमारे शर्तों पर देता है। आ तो बहुत सारे लोग रहे हैं, हमने मना नहीं किया है, पर हमको अभी जो हमारी शर्तें हैं या हम जिस तरह से चाहते हैं, जो मेरे टर्म्स कंडीशन है वो अभी पूरे करते हुए लोग नहीं दिख रहे हैं, तो करेंगे तो हम उस तरह से भी ले सकते हैं।
जो प्राइवेट इक्विटी फंड्स हैं जो आपको अप्रोच कर रहे हैं फंडिंग के लिए, उनकी क्या शर्तें हैं?
नॉर्मली क्या होता है कि वो इक्विटी फंड की बात करते हैं, हम लोग बात करते हैं टर्म लोन की।
तो आप स्टेक डाइल्यूशन की जो बात है,
हाँ,
क्या
वो नहीं करना चाहते,
वो नहीं
इसीलिए प्राइवेट वाले जो है इक्विटी वालों से थोड़ा सा वो चीज़ें नहीं बनी।
कौन से प्राइवेट इक्विटी फंड्स हैं जो
कई लोग आए हैं, उसमें से कई सारी कंपनियां हैं, आते रहते हैं। कम से कम मेरे को लगता है कि यदि मेरे फाइनेंस डिपार्टमेंट से आप पूछेंगे तो मुझे लगता है अभी तक तो कम से कम 1-1.5 दर्जन लोग आ गए होंगे।
रुचि सोया के बारे में बात करते हैं। आपने बहुत अग्रेसिव बिडिंग की है रुचि सोया के लिए, नए बिड सेकंड राउंड ऑफ बिडिंग भी चल रही है अभी, तो आप किस हद तक जा सकते हैं बिडिंग के लिए? क्या आप ज़्यादा अग्रेसिव हो सकते हैं उनकी?
उसके लिए हमारी बहुत अच्छी जो टीम है, बहुत ही प्रोफेशनल्स लोगों की जो टीम है, वो लोग उसमें काम कर रहे हैं अभी, और काम कर रहे हैं और लोग वर्कआउट कर रहे हैं। तो हम लोग ऐसा भी नहीं जाएंगे कि एग्रेसिवली जाने का मतलब कि हम लॉस करने के लिए भी नहीं जाएंगे, पर हमको दिखाई देगा कि उससे हमारे संस्थागत रूप में जब तक हमको लाभ हो सकता है तो तब तक हम छोड़ेंगे भी नहीं।
रुचि सोया के साथ आपका एक पहले भी डील हो चुका है जहां आप सोर्स कर रहे थे ऑयल उनसे, तो इस एक्विजिशन या इस डील के बाद रुचि सोया अगर आपके फेवर में गया, किस हद तक आपको मतलब यूज़फुल हो सकता है?
नहीं, रुचि सोया का देखो हमारा कोई ऐसा कोई रिलेशन नहीं है, मैं आपको बता दूं स्पष्ट रूप से। हमारा सिर्फ और सिर्फ उनको हम लोग ठीक है, हम लोग थर्ड पार्टी मैन्युफैक्चरिंग उनसे कराते हैं, इतने हमारा रिलेशन है। तो जो कमर्शियल डील जैसे दूसरों से हम लोग करते हैं, हमको और पार्टियों से भी हम लोग लेते हैं सामान, वैसे उनसे लेते हैं। इसके अतिरिक्त हमारा कोई उनसे संबंध नहीं है।
Okay, that is an extremely interesting conversation, and we are basically playing out different parts of that interview, the most relevant parts of that interview for you, and we'll keep doing that through the course of the day. I mean, Ekta, the other part which played out a couple of times earlier in the day essentially talks about growth rates, and I think what stood out to me very clearly is that they're not now putting out clear numbers. I mean, if you remember, FY17, their revenue was about 10,000 crores, and they said that, and the year before there was 5,000. 5,000 became 10,000 the year next, and they said 10,000 will become 20,000 in FY18. Priya, who did the interview, asked what the revenue was for FY18, and they said, well, it's actually similar, slightly higher. So we don't have exact numbers yet, but it does seem, and it kind of ties in with what the consumer and FMCG companies that we speak to as well, that the aggressiveness and the aggressiveness is there, but how well they're actually doing in the market, that seems to have kind of abated. I mean, it's just all anecdotal. Many say that it could be a function of them going in so many directions, right? Forget about completely sort of diversified areas like unrelated areas like this potential thing about telecom and steel and all of that stuff. He clarifies all of that as well. But so much product launches in the consumer business as well that it takes time for these products to clear the market at a distributor level or a retail level. And some say, well, that is the problem. If they just focused on the existing set of products, I mean, when they first launched, they'd probably be much better off. But as I said, it's the reason why Patanjali used to get so much attention is because of what it could do to listed consumer companies, right? And we don't hear too much from listed consumer companies about that threat. Otherwise, I mean, I remember a year and a half, 2 years back, you get Dabur, and all they could talk about what they're doing, the honey segment or Imami for that matter, and what the overlap is and the competition is going to be for key segments. It's kind of abated now. We don't hear that much at all. As I said, we'll keep playing out different portions of that interview, and there is more interesting stuff coming up, so keep watching. We take a very quick break here. We come back and we get you some corporate opinion when we return, coming right up.
Welcome back. Well, for the Nifty, we're down around 70 odd points, and the mid-cap index still just about hovering with a cut of around 0.2%. There is some interesting information which is coming in from Uday Kotak, where he is talking to the shareholders. And he's talking actually about banks as well. For example, he is quoted saying that banks are going through turbulent times right now, and reality looks like it's a culmination of years of kicking the can. So there are some hard statements which have come in from Uday Kotak with regards to the entire banking space. He has, however, mentioned that silver lining amidst the chaos is really the insolvency and bankruptcy code. and that in fact is a game changer according to him. So some statements coming in from Uday Kotak to shareholders, and that is flashing on the screen for you. But nonetheless, talking about the markets, we have a couple of stocks which are gaining. So something like a Global Spirits is seeing some amount of buying, so up around 5.5% for that one. Alembic Pharma had received an approval sometime earlier for an antibiotic, so that stock is up around 5% probably again from its Panela facility, and maybe that's why you're seeing that sort of buying coming through, where US approvals have started picking up. Well, we need to take a break now, but we'll leave you with some market opinion. This is coming from Nilesh Shah of Kotak Mahindra AMC on the selling scene in the mid-cap space.
The pain on the small and mid-cap is still there. Clearly, there has been fair amount of immature or uninformed money which has gone into lots of small and mid-cap stocks in chase of return, and their selling is still continuing. We believe quality mid-caps will start bottoming out over next 30-40 days.
Welcome back. The big story overnight, of course, has been the Fed increasing interest rates and, of course, the accompanying statement. And also, by the way, the announcement that now there will be a press conference every meeting. There was some talk that this would be considered hawkish. But, well, I mean, you don't see that in the dollar or other markets. Manishi Ray Chaudhary is now joining in to discuss what he makes of that and, of course, markets. Manishi, thanks very much. Good morning. How do you feel about India right now as a market?
I'm sort of ambivalent about it because India, on one hand, benefits from relative ease of stock selection, but at the same time, India has not participated in the earnings estimate revision upwards, which her North Asian peers have clearly participated in. If you look at last 12 to 18 months, Asian earnings estimates are up about 15 to 18% and driven largely by Korea, China, to some extent other North Asian pockets like Taiwan. Indian earnings have continued to drift downwards, and we think that this is possibly posing the biggest risk to India right now, in conjunction with the fact that the valuation premiums remain stretched on both price earnings and price to book terms. They are possibly one standard deviation higher than the long-term average. If I put in some of the other variables like the oil price spike, which threatens to increase India's current account deficit and therefore continue to put pressure on the currency, it would obviously be another headwind to the market in the near term.
Manishi, hi. Thank you very much for joining in. Well, we are 6 months into 2018. Say if we had to have this conversation about, where the markets would be, say, 6 months down the line, which would essentially be the end of 2018, where do you think the Nifty would probably be?
Well, I don't have a Nifty target, but I do have a Sensex target. By end of 2018, that's at 37,500, which is approximately 5% up from here. Right, so it would mean that, the market does not really leave much of an upside. And we understand that even with that target of 37,500, we're possibly on the more bullish side compared to many of our peers. Second, if one looks at the US dollar returns, which possibly a typical FII is more concerned about, and if one factors in a depreciation of the rupee, not much, maybe just about 2 to 3% from here, then the returns, even to that aggressive target of 37,500, would just be about 2 to 3%. So it means that, even taking a relatively optimistic point of view, the Indian market does not leave much of an upside for a secondary market investor at this point of time.
Manishi, I mean, you look at global markets as well. We had Paul Tudor Jones, one of the all-time greats in terms of macro trading on CNBC US a day back. And he said that post the midterm elections in the US, he sees a big melt-up in US markets. And of course, his bigger call is that, I mean, this can't go on, so at some point we'll get a big dip I mean, maybe a recession even, because I mean the cycle has gone on for what, 8 years now, 8-9 years. What would that mean? I mean, if you juxtapose that to India, what would that mean? Because I mean, US clearly is the driver. That's where the maximum action has been, you know, through the course of the last year and a half, and even now.
You're right in saying that US has been the driver, because developed market demand has to a large extent driven the Asian exporters and even many other Asian consumer discretionary manufacturers. Having said that, we are also seeing pretty significant resilience in domestic demand, pure domestic consumption demand in the large markets like India and China. We are of course not subscribers to the hypothesis of a recession in the United States anytime soon, even though we are forecasting a slower growth globally and in the United States in 2019 compared to 2018. We think that the best of economic growth and possibly the peak economic growth is behind us. And going forward, there are two important variables which are likely to constrain that growth. First, we are seeing tighter monetary conditions across the world. It started in the developed markets and are now percolating down to the emerging markets. And second, we are also seeing capacity constraints, particularly in the United States and in the European region. This capacity constraint in terms of manufacturing capacity and tighter labor supply threatens to keep inflation at a slightly elevated level, which would possibly support a tighter monetary policy environment for the foreseeable time horizon. So in that context, if you juxtapose that to what we are seeing in India, it could mean that the RBI continues to hike rates. In fact, we are seeing one more rate hike in the second half of 2018. And it could also mean that in the very near term, the Indian rupee continues to be sort of wobbly against the developed market currencies, particularly the US dollar. So, the conclusion, therefore, is obvious. I mean, this, V-shaped recovery that we have seen in the Indian market, I think has run its course for the time being, and it would pay to be cautious and very stock-specific and selective in the Indian market right now.
Nishi, actually, that was my next question. You did mention that in terms of key absolute levels, there's not much upside when you talk about the Sensex. But exactly that, there are stocks which have corrected 70, 90% in the mid-caps. How do you identify whether it is an opportunity to actually purchase those stocks or to leave them be?
All right. See, mid-cap as a universe could still remain wobbly for the time being, because when the markets decline, the mid-caps, which tend to be high beta, by the nature of those investments, tend to correct more. We must also remember that the small and mid-cap indices of India appreciated somewhere around 60 to 65% in 2017. So the correction that we are seeing today, these 20 to 25% correction that you pointed out, it's really happening from a very high level of exuberance that we saw last year. So the valuations have not really corrected to cheap levels yet. Maybe they were ridiculously expensive and they have come down to only just about moderately expensive levels. Having said this, I mean, there are, obviously differences between stocks and sectors, even in the mid-cap space. We prefer to be stock-specific and sector-specific in this regard. We think that there are some opportunities, possibly in the non-banking finance corporation, that side. There could be some even in the, in the rural consumption space, particularly, and in this area, one has to search for relatively inexpensive stocks. So I think, those are some of the very few selective silos that we're looking at.
Manishi, thank you very much. Appreciate you joining in as always. It's always good to speak with you. Thanks indeed. All right, 70 points lower on the Nifty. We got about 10,785 coming in. So, I mean, actually, again, from when we started at 11, we're about 15 odd points lower. incremental losses, but mid caps are still doing better than large caps. We were down about 0.25% on the mid caps. We're down about 1/3% now. We take a very quick break here from Ektami. Everyone on the team, thank you very much for staying with us. Halftime report will take the action forward.